YouTube. Yeah, it shows going live. Yes, you are live. Oh, yeah, it shows we are live. Yeah. Okay. All right. Sorry for the slight interruption. We just wanted to check that we are good to go on YouTube as well. Okay. So yeah, I mean this has been quite a phenomenon nowadays. Some houses because I serve buyers as well, right? Some houses you don't even have the chance to view, especially with the cooling not cooling measures, with the measures, right? Previously it was at 2 packs, now it's at 5 packs. Some you haven't even get the chance to view already, option out already. So hopefully next year, if they start to relax the measures, at least you get to view those units lah. Yeah. Maybe for those of you who have joined us, right, would you like to share what are some of the units that you have been, wanting to take a look at, wanting to buy, but have no chance of viewing, have put in offers, but somehow or other just cannot get it. So for everybody's benefit, so we can see what are really the pockets, the types of property with really strong demand. So 2021 recap in just one slide, yeah, short and sweet, right? We've seen sharp price increments basically across all sectors, our private residential, our HDB market. This has driven inventory very low, right? Both in the resale market and in the new launch market. So with inventory at historical lows, prices inevitably has been pushed up. Right, owners have been adjusting their price expectations. Buyers have trouble even viewing the particular property. Hi Kit, Merry Christmas to you as well. Yeah, so I mean all of this again somewhat unexpected. If we take a look at 2020, but in 2021, it's basically been the same story, carried on from 2020 and just getting more and more prevalent as we go through the months, right? Which accumulated with the cooling measures, right? They came about last month. No, not last month. Still this month. Yeah, we still have 3 more days to next month. So still this month, December, earlier this month. Yeah. And so with rising prices, there's that phenomenon of the high COV short for cash over valuation. So why in this market is COV so prevalent is because owners have a certain expectation of the price, and in the seller's market, the owners always want to sell higher than the previous owner. And also because of the fact that the inventory levels are so low, a lot of the owners are also adopting the mindset that if I cannot hit this price, I can't buy the other thing, because for them they have to sell at a certain price to buy high, right? Everybody have that concern, if I sell high, I buy high. And that is all going to be like a trickle down effect, because we have started off at a stage whereby transactions are moving around valuation prices. And as the market swings into a seller's market, that's where valuations are always laggard, but expectations are always forward priced. So owners are pricing their properties 2 to 3 years down. The prices are 2 to 3 years down the road. They are pricing their property based on what are some of the new launches fetching at. They are pricing their units at what are some of the potential, what are some of the land bid prices that were done at. And all of that add in with the fact that there's the flood of buyers being forced into a very narrow inventory, right? They have not that many to choose from because of the delay in construction and so on. So all these have basically created a perfect storm, if you ask me, or where all the factors really just combined, right, to push up prices significantly, which brings me to the last point on cooling measures. For those of you who follow us, you would know that in the past 2 months, right, I've been predicting that I don't expect the cooling measures to come in so soon, primarily because the supply side issues aren't being resolved yet, and if the cooling measures come in and penalize the developers too much, right, I'm afraid that the government is simply going to make the price increment and the inevitable price shoot up, right, all the more serious moving forward, which, you know, that concern of mine has been realized because the cooling measures have indeed came earlier than we all expected it to come. How is that all going to play out? I'm going to touch on that later on, right? As I talk about the cooling measures in greater detail. Right? Let's move forward. You know, and maybe let's have some fun and let's have some interaction. Let me know in your comments, right? What are some of the how would you recap the 2021 property market? In probably a word, 2 words, a sentence, right? How would you recap the 2021 property market? And so we did this same, you know, video 1 year back to predict what's going to happen in 2021. And like all good analysts, right? We got a what? Wing Kyong says what? That's probably the single best word to recap the whole market. Well, it also kind of depends on who you are lah. Are you already in the market, or if you're not in the market? If you're not yet in the market, what probably not that good of word. But if you're already in the market, what is probably the best word. So, you know, like all good analysts, right? You want to make sure that your predictions are, you know, pretty. You want to take stock lah of what your predictions are. So if our predictions very not soon, right, then maybe next year nobody want to watch us anymore. So we got to come and take a look at how our predictions went. Yes, Kid, 3,000 PSF we go. 3,000 PSF for where? For Park Esta, is it? 3,000 PSF for Park Esta, Kid. Okay, so let's review our predictions and see how our predictions went. Yeah. So last year we predicted interest rates to remain low, which was correct. Yeah. We're only going to see interest rates come up in the year 2022, and that low interest rate has really helped push the market up. We predicted lesser launches. Actually, the one we already know, right? Because the bulk of the launches, the bulk of the supply that came on due to the 2018 en bloc rush, the 2017, 2018 en bloc rush, that kind of stopped after the 2018 cooling measures. So after 2018, the en bloc has slowed down significantly. The land sales have slowed down quite a bit as well, because even though the land sale numbers, if you're looking at how many land sales that were actually transacted, were not that low, but the project sizes were a lot smaller. Add together with the fact that a lot of them are then subjected to the new minimum average unit size that have really squeezed the demand significantly in certain directions. Yeah, lesser choices, right, because of the drop in inventory that panned out as well. And of course, the last part, right, with resale demand picking up because of the fact that the new launch inventories are going to dry up very, very quickly, and forcing people then to go into the resale market. And we have seen resale prices picking up significantly, right? So much so that the government had to step in preemptively to put in the cooling measures. So, you know, I think on these 4 points, right, pretty good. Some people say self-praise is no praise, but you know, I thought I did pretty okay. So, gonna give myself a pat on the back for that. We also predicted that the cooling measures will come. So late last year, I thought the cooling measures would come, but because of the fact that as we drag on, right, in the first half of the year, and seeing that supply side issues still unresolved, supply chain issues, increased manpower, those things still unresolved, and that sort of gave me the how do I say that, made me feel that the cooling measures weren't going to come around so quickly, because I thought the government would allow those issues to be resolved first before coming in. But not to say the government was wrong to do so, right? We all accepted, right, that the new round of cooling measures coming was probably the worst kept secret in the Singapore property market. We all knew the cooling measure, that would be one round of cooling measures coming. The only question mark was as to when exactly would the cooling measures come lah. So on that note, right, pretty spot on as well that, you know, the cooling measures would have come. Not so precise in terms of exactly when, but still, yeah, we all knew the cooling measures was going to come. And then what were some of the opportunities that we pointed out to you? Some things to look out for in the 2021, the market in 2021. We pointed out landed properties, and we also pointed out the large units in remaining new launches. And so let's take a look at how that and how those opportunities pan out. Yeah, with looking at actual data. So, landed properties, let's take a look at how they performed compared to the other market segments. So I took the data from, 2019, 2020, 2021. I think we can zoom in a little bit for all of you to be able to see it better. Zoom. Let me try. Never mind. Yeah, not very familiar with Mac, but I tried to use PC, but it keep lagging. So I hope you guys can see. On the left column, right, it is the combined prices, both landed and non-landed. From 2019 to 2020, it dipped by 5.9%, but from 2020 to 2021, right? So for this year, and I took Q3 because Q4 data is not out yet, up by 15%, right? So net about 9.1%. But if we take a look at landed, so landed outperformed all the market segments in 2020, and also in 2021 continued that trajectory. So over the last 2 years, up 13.9% total. Yeah, but you compare that to non-landed, over the last 2 years only came out about 6.7%. So landed in that market segment, if we look at increase in property price index, have outperformed the other market segments. So for those of you who are out into the market looking for a landed property now, very, very difficult. Price points, right? Previously, actually just maybe 1.5 years back, 2 years back, you could find a probably original condition semi-D for maybe 3.5 million in Kemangan area, District 14, District 15. But in this market, I believe even at 3.5 million, you want to find something at District 15, you'll be looking at a very original condition, inter-terrace. So that drops you down from semi-D all the way to inter-terrace. You jump across the in-between, which is a corner terrace, all of that within just a single year. So not just, so that's how we make sense of actual movements in prices, because we see percentages, sometimes you cannot reconcile them, right? So I wanted to share with you some of the observations I see on the ground in the market. So landed prices have came up significantly over the last 2 years. And so, for those of you who bought something last year, or as a matter of fact, bought a landed property earlier this year, you are probably already sitting on massive profits, right? Because of the fact that landed property have little to no new supply coming in, right? Little supply, right? We have some supply in the sense them coming up, like projects like Belgravia Ace, we have like over at Seletar with Nim Collection, like the different batches of Luxus Hill. But other than those, we don't usually see new supply of landed properties coming up, because they are all sort of a legacy that has been passed down from many years ago. The government don't usually release new landed property sites for sale. So it's a market segment with very high demand but very little to no supply. The reason why we pointed out, if for those of you who maybe have not seen that prediction one, right, and since we are on that, right, we are going to put that link in the, for those of you who's going to watch the replay, right, we're going to put that link of our predictions video up, right, probably somewhere over here. Go and watch it, then you can understand why we make those predictions. We didn't just pluck it out thin air, but to summarize it for you guys, because we saw that the large units in the new launch developments were pushing very, very close to the landed property prices, right? 5 bedders, 99 years, hitting 2.5 million, 2.6 million. At that point in time, late last year, landed properties, inter-terrace, maybe 3 million, 2.8, 3 million, 3.5 million. That gap is very, very narrow. So which is why we see demand actually flowing very quickly over to landed properties the minute people start to realize the trends in the 99-year new launch condominiums. Together with the macro, the macro trend changes, such as a preference for larger space, the proliferation of more multi-generation living as part of the things that have changed over the couple of years due to the situation that we are in. I can't say that word again because if not, they were going to block my video. So, demand for large units, this is something that perhaps is maybe not so obvious to the market, especially if you're not like either an agent or not somebody that's actively looking for a unit of this type in the market. So I put out 3 developments, High Park Residences, 1,000 over units, DNES, High Park Residences, our favorite case study over in Fernvale. We have DNES and Cocoa Palms in Pasir Ris. Both developments are bigger than 1,000 units. The 4 and 5 bedroom units, right, if you tally all of them up, it's about 21 units available only. And one of the units at DNES has been sold by us just last month. The demand, honestly, right, coming from someone that is active on the ground, it's, for lack of a better word, it's nuts. Yeah. So, just a couple of years back, we were trying to list that particular unit as well. We were struggling to get any offers in at 1.6 M. Fast forward 1 year, sold it with multiple offers and at 80K above the last transacted price, right? Setting a record price in DNES. So for the owners of large units in the OCR, my recommendation, my suggestion, hang tight. We are going to see this trend getting more and more favorable to you guys moving forward. For those of you who are looking to buy into this kind of large 4 bedrooms, 5 bedrooms units, buyers of these developments, I would recommend you act quickly, right? Take a look at some of the MOP units that's going to come up within the next year, right? We have quite a number of them. I'm going to share that with you later on in this presentation. But I would recommend taking action if these are the type of units you are looking at to buy, taking action sooner rather than later. Yeah, because prices are really, really moving very, very quickly because landed prices have shot up significantly. Now everybody is forced back into this this segment at this kind of price points, and eventually this is also going to go up, and you may end up having to either go to something that's very, very old or have to, if you can't stretch your budget that much, right, either go to something that's very, very old or compromise on your size to buy, perhaps a 3-bedder. So you notice that domino effect, right, of prices moving up, right, based on the size, right? The larger the size, they lead the price first and then have a knock-on effect moving down. So what are some of the major events that happened this year? Of course, right, the cooling measures, right, the big obvious one. We've done a video on that, talk about that in detail. Released it I believe it was last week. So for those of you who have not watched it yet, right, you can go over to watch it. I explained the recent round of cooling measures using 3 everyday items, right? A cane, a can, and a spring. So just a very, very quick summary of what I mean by that, right? The analogy of the cane, the government is using the cane to warn us, right, not to buy up the prices too much, yeah? Because at the last time around, the government allowed the prices to shoot up before instituting the cooling measures. This time around, they don't want to wait for that to happen and then come back in and punish the market, because that's going to create periods of uncertainty in the market. So for now, they decide to use the cane first, rather than, so they're taking the cane in to warn you first before caning you after you did something naughty lah. The analogy of the can, they are kicking the can down the road because they hope that with time the supply chain issues will resolve themselves, number one. Number two, interest rates coming up will naturally dampen the market on its own. Yeah, so kicking the can down the road so they don't have to do something overly drastic, such as instituting capital gains tax, for example, such as lowering LTV. This sort of cooling measures will take away demand from the market. If you notice, this round of cooling measures basically is adjustments and tweaking and increasing existing cooling measures, which do not remove demand from the market. They just pause and hold back demand temporarily. So it's a matter of time before the people get over the fact of these cooling measures. They learn how to circumvent it, and then the prices will just continue to move again. Then the government need to think of something again, right? So hopefully the increase in interest rates will hold back prices slightly lah. And then the analogy of the spring, yeah. So the spring is it's the analogy for the potential for property price to increase. So the more the spring is compressed, right, the higher chance property price will shoot up very, very quickly over a short period of time. Basically something that like what happened in 2017, 2018, and something that the government is trying very, very hard to avoid. So what are some of the things that's pressing down the spring, right? We have low interest rates pressing down on the spring. We have supply chain issues pressing down on the spring. We have high number of record number of HDB MOPs pushing down on the spring, increased wealth. So all these many factors really just squeezing that spring down so much, right? That if the government don't step in to sort of use this cooling measure to release that pressure on the spring a little bit, it's going to result in a sharp shoot up in prices in a very short period of time lah. So cooling measure is to release a little bit of pressure on it, right? Then like I said earlier, with interest rates, right, naturally the spring pressure will release it a bit more gently over a prolonged period of time. Okay, but if you want to understand that in greater detail, go and watch the video. It is the very next video. If you go into our YouTube channel, it's the very first video before this, yeah. So if you really go and understand the cooling measures, the two main groups that the government is trying to target at, for me personally, it's the foreigners and also the developers. Okay, let's take a look at this. Okay, so and I'm going to add on a little bit more on top of what I shared in that video over here. So if you take a look at the prices, right, over in 2017 up to 2018, prices came up 8.7%. Then the cooling measures came in. Yeah, so today it was 8.3%. Then the cooling measures come in. So moral of the story, right? The government trying to keep things under 9% lah. So the next time around, right, all we need to do is track this number. If it nudges close to 9%, we more or less know when the cooling measures are going to come in. Yeah. So, but then some of you may say, "Hey, Alvin, I thought you say this time around they're trying to be preemptive rather than reactive." But it already came out 8.3%. Then they come out with the cooling measure. So how can you say it's being preemptive? If they are really preemptive, right, they would have done so maybe at the start of 2021 already. So it's then important to understand the key difference in the market, where the market stands, right, in 2018 and in 2021 and 2020. right? 2020 and 2021. In 2018, that price increment was on the back of a surge and a significant increase in supply in the market, right? Because that was on the back of high land sales and high en bloc, right? But if you look at today, right, there's record low inventory on the back of price increment. So there's a difference in terms of the supply in the market between 2018 and 2020. And if you watch some of my previous videos, I sort of explain how I see this as being something that is a lot more sustainable and a lot more organic than what was happening in 2018, because the increment in prices like that wasn't really driven by the new launch prices versus 2018, which was primarily driven by new launch, new price, new benchmark prices. This time around, the price increment was really more demand-driven price increments. Yeah, people snapping up properties, and it resulted in the resale prices. If you really look at it, resale prices narrowing its gap with the new launch. That's also another thing if you really want to sort of understand the difference in the market between 2018 and today. Right? In 2018, the new launch and resale price gap was very, very big. Right? So now that you understand this, you hopefully, right, we all have a better picture of why the government is doing this, hence that 3 items analogy, right? But to summarize it, to make it easy for you to understand, they are not trying to destroy demand, right? They are just trying to halt demand in hopes that some of the external factors will hold the property market back organically, naturally, yeah? And so, right, the 2 groups that will be affected, right, foreigners and developers. So what I did some research, right, and so in this particular chart, it charts the price movements of favorable cities in the world that developers would like to, or high net worth individuals would like to buy. So we have Japan, we have Seoul, we have Hong Kong, Singapore, US, Australia, UK, Taiwan, right? Basically people's favorite destinations to go and buy property. And if you notice, right, actually the Singapore property, if we take baseline being 100 in Q4 2019, it's only come up to 106.9, right? 6.9% in the last 2 years. Compare that with SK is South Korea, right? 140%, the US increase in 40% increase, right? The US 27% increase, Australia, 16% increase, UK despite Brexit, right? 14.9% increase. So these guys, they are educated people. They have to be, right? They are smart people. If not, they wouldn't be so rich. They will be looking at these prices and be telling themselves, say, hey, despite this extra 10% tax that I have to pay, does Singapore still represent good value for money in that sense, because it hasn't exactly gone up as much as the other gateway cities in the world. Yeah, not just this slide, right? In my next slide, this tracks all the way back to 2011, and the reason why I put this slide inside here is to help you understand that the Singapore property market has been suppressed, right, artificially, if that's the right word for it, right, because of the government cooling measures that came in from 2011 to 2013. And because of that, right, if you compare Singapore's price movements with probably the same number of cities, right, with a little bit more, right, Hong Kong, New Zealand, China, even Malaysia, Australia, almost like never move if you want to compare with the other cities. So, if you were investor and you look at this, right, you may feel the Singapore market still offers good value for money, right? It hasn't really increased that much as yet. So the extra 10%, maybe it's still worth it, right? Because even if I factor in that 10% and compare the prices, it may still represent good value for money in that sense. So based on this comparison, it's also understanding who we are up against, right? So we are also looking at what are some of the taxation, because yes, they come into Singapore, right? For us, if we look in that microscope, right, of just being with tunnel vision, just looking at Singapore, you may be thinking, wow, extra 30%, so much more. Will people actually pay that number? But if you take a step back, right, these guys, they are comparing cities between the different cities. Okay, so they're also analyzing not just the upfront cost, they also analyze, right, what's the cost of holding on to these properties. So yes, right, a lot of the countries don't really have such high ABSD penalties for foreigners, but they have very high taxation if you do sell it, right? For example, I take just one example in the UK, 28% on your sale price. You then have 40% inheritance tax. A lot of these guys, they are buying all these properties for legacy planning, hedging against potential geopolitical risk. So over in the UK, income tax 20%, 40%, 45%, depending on which tier are you at, right? But in Singapore, we cap it out at 22%. So there's a lot of other taxes involved for all those extra cities, and with all these things weighing them down, their prices have still shot up so much. But versus Singapore, right? Yes, the initial transaction cost may be a little bit higher, but they will be just comparing across the board based on net, how much are they buying, what is the net price are they buying at. So per square feet wise, Singapore, if you even compare it to Shanghai, is still significantly cheaper. You want to compare to New York, it's still significantly cheaper, even with the increase in ABSD. And Singapore are not, the Singapore is one of the few countries in the world not subjected to capital gains tax. Yet, I hope I'm not jinxing this, but if the capital gains tax really do come, that will really erase and suck away demand. And so that's perhaps the single scariest potential cooling measure that may come in. But if next year we see prices shooting up like 10, 15, 20%, I think we all have to brace ourselves for some capital gains tax to come in. But as of now, I still don't think so. Hopefully this round of cooling measures will help prevent us from getting to that stage. Okay? So all in all, right, I think the high net worth, they're still going to come in to Singapore, even with the increase in the 10% additional buyer's stamp duty. And so we're still going to expect the ultra luxury level properties to still be transacting even with this 10% increase. Okay? So then, right, with what has happened in 2021, and then with the cooling measures, right, how do we then gain some clarity as to what to expect in the market in the next 1 or 2 years? So we want to take a look at what are some of the things that will not change even with the cooling measures, right? The low inventory is still not going to change in the next 1 to 2 years, because even if the government were to increase the supply, the developers come in and start to en bloc. All those supply is not going to be available, with just by snapping your fingers, right? They're going to take time to build, right? Yes. So later on, I'm going to share with you some of the news that the government has released after the cooling measures with the increase in supply. But those supply will only be available for people to actually move in and stay 5, 6 years, 4, 5, 6 years down the road. So we're still going to face a issue of low inventory in the next 1 to 2 years. Okay, the increased wealth, as with the population census, I'm going to touch on that a little bit later on. That's not going to change. A high number of HDB MOPs, similarly, that's not going to change because those people are already in their HDBs and they're going to hit their MOP soon. So that's also not going to change, right? And benchmark prices being set from the 2021 land sales, right? So I'm going to take you through some of these points, right? So if you look at it, so right after the cooling measures were announced, the very next day the government also came out to say, I'm going to increase supply. So as you can see, cooling measures a lot of the times is trying to control demand side. So on the supply side, they are also hoping to increase the supply so as to use these both economic triggers, I don't know, triggers, knobs, whatever you want to call it, right, to control the prices. Okay. So, but then you got to go and look at, how much supply is actually going to come online. So, for those of you who just go and look at it like that, right, and you see them saying things like 40% increase, you're going to have 35% increase, you'll be thinking, wow, that's a significant increase, huh? And then the next thing that's going to come inside your head is going to be, wow, supply increased so much, demand dropping, supply coming up, demand dropping. That's going to cause prices to come down, right? But so that's why I'm here, right? I want to share with you guys in detail how do you really understand all these figures. So if you take a look at this table, right, credits to Orange Tea for putting together a pretty good table over here to allow us to see the trends. Again, right, notice how as a matter of fact, after the 2018 cooling measures, the GRS numbers were very, very low, even before, right, all these things that's happening. Yeah, right now it was already very low because the government was knowing the fact that the last round of cooling measures that came on is going to suck out or to halt the demand from both the developers and also from the buyers. They didn't really release a lot of land, and then they were supposed to probably halt that. What I feel, halt that for maybe a couple of quarters and then start to push out supply again, probably in late 2020 and 2021. But because of what has happened, they couldn't do that, and so it's being pushed all the way back to first half 2022. So notice how we've gone 1, 2, 3, 4, 5, 6, basically 6 quarters of lower than normal government land sales. This is going to result in a period in time which is, for those of you who follow us, right, remember the 2025, 2026 potential period of under supply of TOP units. That is still going to happen. You release, right, 2,700 units nowadays. Is that really a lot? If you're going to compare to 1,718, it's also not that much. Yeah, provided and you have to continue supplying 2007, 2008 units for 1, 2, 3, 4, about 4 quarters to really start to make up for the lack in GLS over the last couple of quarters. Yeah. So conclusion, right? This increase is not going to cause an oversupply in the market, right? For those of you who have that concern, if they go on maybe 6 quarters of 2,800 units, maybe there will be an oversupply, but the government would not do something like that, right? Because they don't want to have an oversupply in the market. That's the whole reason why they did the cooling measures back in 2018. So they are being pretty clever about it, right? If you really see it, how I see it, they institute the cooling measures first. And who is one of the parties that's going to be affected by this round of cooling measures? The developers. They bring the cane out, warn you first. Then they supply the land out. So they're saying, I'm going to, you better watch it. Okay, here, you want to buy or don't want to buy. You better beat it with bearing in mind the new cooling measures that that we have instituted. Yeah. On that note, right, they were pretty smart about it, because if they don't do that cooling measure, they launch the supply out like that, the developers are going to beat the hell out of those prices. Yeah. Right, the next one that I want to take a look at, right, BTO units are also going to be released, and on this one the increase really will be significant. Yeah, we average about 17,000, 15,000. They're pushing it up to 23,000 over the next 2 years. This is a significant increase. Yeah, don't get me wrong, this one is significant. The private one, not so. This one is significant, and that's bad news for HDB owners, buyers, which is generally bad news for the HDB market. Because again, I've talked about it, the increase in HDB prices over the last couple of quarters. Was it because there was an oversupply, or no, was that because the supply in the market is really that low? No, right? It's a lot more so because the new batch of BTOs, the government is telling them it has to be so much later, 2026, right, 2027. Artificially forcing demand into the resale market and artificially pushing up prices. All that aside, right? All that aside, if you're going to see supply charts like that with a lack of private supply, so high HDB MOP units, right? Because all these BTOs eventually going to turn into MOP units. These sort of numbers with low private supply is going to push private prices up significantly. Remember that whole spring analogy. These numbers is adding in onto the pressure of the spring. Okay. Right, so what else is not going to change? Right, I wanted to show you this figure. Look at on the back of the GLS chart previously. Remember how many quarters? 1, 2, 3, 4, 5, 6. Right, 6 quarters of low number of GLS, followed by essentially 1, 2, 3 years of very low en bloc sales as well. We have just started to see en bloc slowly picking up, right? Again, then the government has come in preemptively to warn the developers not to do that, right? They can't really control the en bloc market, so which is why they had to do the adjustments to the cooling measures lah. So if we don't see it, right, and we have already seen this with Shun Tak, right, Pansy Ho, daughter of Stanley Ho, the Macau gambling mogul, the rich man, right, the rich dude that passed away earlier this year. Yeah, they have abandoned their en bloc bid, right, forgo the deposit because of the cooling measures, right? So that's gonna hopefully the government has achieved its objective of warning developers not to be overly aggressive in their en bloc bids lah. Yeah. But if you're asking me if that holds back en blocs too much and they're only just releasing that kind of numbers of GLS, right, it's going to cause a significant undersupply in the market, significant undersupply in the private market. Yeah. So what else is not going to change, right? The increase in affluence, right? Increase in wealth in the market. And this is the population census. So if you were to ask me what was the most important thing that came out in 2021, right, it is the Singapore population census, right? So many things that we can take away from it, yeah, with the fact that, you know, the largest group today is formed by people with combined 20K monthly income. If we work our way backwards, yeah, they're going to work out to have a budget of about 3.45 million, right? Use this info, right, and come back to the fact why I keep saying large units in the OCR will do very, very well moving forward, right? We've already seen actual data with the lack of supply in the market today, resale market today, right? If you were to look at new launches, right, the large units are going to do well moving forward as well, based on this very simple fact of increased affluence in the market. Right, we see an increase in the number of millionaires in Singapore, expected to rise 61.9% by 2025. Right, part of the why, right, the census have also shared with us, because more than 50% of married couples today are dual careers. Right, they are getting married and having kids later, allowing them to save up for a lot more money. Right, most of them get married already got property. Yeah, allowing them to have higher disposable income. Right, increased preferences for private properties, right, 11.5% to 16% over the last 10 years, and I'm going to expect this percentage to continue to increase moving forward. So all in all, right, it just shows that the demand is from all those HDBs is going to be converted into the private demand moving forward. Yeah, what else is not going to change? The amount of the number of HDBs hitting their MOP is not going to change. Right, so which is actually, if you look at this chart, right, I like to tell people that I feel HDB have, you know, the last 2 years to thank for the prices not really dipping down, because assuming none of all these things are happening in the market right now, right? So anyway, for those of you who just joined, right, pardon me if you feel like I want to say something I cannot say it, right? It's because if I do say it, YouTube is going to block my video, right? And I wouldn't be able to publicize this video. Like if I say that word, they will block it. So I cannot say that word. But we all know that word, right? The C word or the P word, okay? Without that, yeah, the market would have been flooded by a high number of HDB MOPs. And with that, right, it's only going to cause prices to continue to go, HDB resale prices to continue to go downwards had none of this happened. So I thought HDB caught a break on that part and have all this to thank for prices basically holding steady, or as a matter of fact now rising up beyond anyone's expectations. But the fact is that supply is in the market right now. So once supply chain issues are resolved on the HDB front, I expect HDB prices to correct themselves again. Yeah, and to continue on the trend that we have seen previously. So HDB owners, right, and with that previous slide, right, of the significant increase in supply again in 2022, 2023 is all in all pretty bad news for HDB owners. So please, HDB owners, do take note of this if you have the idea of upgrading. Again, I would recommend doing it sooner rather than later. So what's the supply moving forward, right? What are some of that new supply that the government is putting out? Okay, we have Pine Grove, Dunman Road, Lentor Central, Lentor Hills, and EC over at Bukit Batok West. So while they said, right, we're going to release 2,700 units worth of land in the next half of that is going to be taken up by the Dunman Road site. And that is that one site that I will be paying a lot of attention to because that site already got buyers eyeing that site. So you can imagine the number of developers eyeing that site, right? But with a 1,000 unit site, I expect the price to be pretty high, most likely in excess of $1 billion. So we should be seeing joint ventures from developers going in to bid for this land. And with the kind of strong demand, I don't think the developers will be overly concerned with the new round of cooling measures over here. The Pine Grove site is also another site that I expect very, very strong demand from developers, because it's been a while since there has been any launches in that area. The area is also very, very popular with people looking to move there for schools as well, right? So what I would be paying attention to all these land sales moving forward really is the number of developers, not just the price that they are transacted at, right? Because that's going to be high, right? Like it or not, it's going to be high. It's going to set new benchmark prices. But what else will I be looking at? I will be looking at the number of developers bidding for these plots. Yeah, because if you notice in 2018, after the cooling measures, the number of developers bidding for plots dropped, right? So like Penrose, 6-7 bidders, right? Lower than, if the number is lower than 10, that should tell you that the developers are still trying to figure their way out as to how to make money with this round of cooling measures lah. But all in all, I feel the mass market, the developers catering to the mass market, they would not be so afraid. So if I were to throw a number out there, right, I would still expect to see maybe 12-15 bidders for these plots, maybe for the Dunman site, maybe even in excess of 15 lah. But that said, that number really a little bit hard to gauge, because the big name developers may do joint ventures lah, hence dropping the numbers down. But in actual fact, a lot of developers will be very, very keen on that side. Okay, so that's that. All in all, right, if you were to ask me, still not enough, this supply. Right, so what else is not going to change? The land sale prices that have already been locked in by the developers. Right, we have slim barracks in the RCR. The developers will have to sell it at between 2,001 to 2,350 PSF. Right, but what would be interesting to see would be how Lentor and Ang Mo Kio Central fare, because these guys are going to be the ones that set the new benchmark prices for OCR PSFs. Right, and if we see strong take-up rates for units with this kind of PSF in the OCR, that's going to lead the continued price increment. Right, that's going to trickle down to the market as a whole. Okay. So that's that, right? Wow, it took me an hour to do the 2021 recap. So let's take a look at the 2022 data. Yeah, so I'm going to run through that pretty quickly because the data, right, nothing much that we can really see from here, right? It's just more for you to pay attention to, and later on, right, and in the conclusion, I'll piece all of this together to derive our predictions, right, and opportunities that we'll see in the next year, right? So TOP supply, right, that has already probably been set in stone. Yeah, regardless of how much land the government sell, regardless of how much en bloc the developers do, right, they cannot increase the TOP supply significantly in 2022 already lah, because all these the developers have all these are land projects that were en bloc close to five years ago already. Yeah. So if we look at it, the total number of TOP units in 2022 is going to be numbered at about 14,000. That's going to be a 67% increase from 2021. So this is another one of the somewhat more hidden reasons behind the sharp increase in prices rise, because this year, right, there really just isn't that many TOP units. So that's also actually another reason that was pressing down on the spring that I didn't mention earlier, right? Out of that 14,000 units that was going to hit the TOP, 2,000 of them is going to come from the CCR, right? We're going to have 6,500 in the RCR and only 2,656 in the OCR. I hope this is as clear as day where the opportunity lies, right? If you look at the last slide and if you look at this slide, it's going to paint you a pretty clear picture where the opportunities lie. I hope I make it pretty obvious. Don't need me to say out so obvious, right? Yeah. So, but then later on, right, based on this observation, what are some of the interesting conclusions, right, I derive out of that? Okay. What are some of the projects that are predicted to TOP in 2022? Yeah, we can see a large chunk of them over in the CCR, right? Also quite a fair number in the RCR, and just not that many in the OCR. Okay. And so with all these units hitting its TOP next year, I expect to see a lot of I missed out Park Botania in the OCR. Yeah, but okay. Yeah, so you can add Park Botania into that list for the OCR lah. Right, but for those of you who want to have a glimpse of how the sub-sale market is going to look like, right, in this project, you can go and check out the transaction data for Park Botania. We already have 3-bedroom premium owners making close to like 200 to 250,000, right? Last I checked earlier this week. And Park Botania is beside High Park residences, and we all know for a fact that that is not the most fantastic of locations. So, right, with that, I'm going to share that observation also later on. Right, I know it's a little bit small, so for those of you who cannot see, right, you can drop me a text. I'm happy to send this list over to you. But then again, this is more of what are some of the projects I predict will TOP lah, right, but not confirmed. But this slide is one that is perhaps a bit more interesting to all of you, especially to the upgraders. Yeah, the ECs hitting its MOP in 2022, right? We have quite a number of them, and all these numbers are going to supplement the TOP supply in the private market as well, right? All this is not captured in my initial slide on the TOP supply. So for upgraders, right, again, this is good news for you because it gives, right, it feeds you with more choices in the market. But then again, right, yes, if you look at the numbers, they may seem significant, but what you do not know is whether all these owners want to sell, number one. Number two, what you do not know is what kind of prices they would be looking to sell at. Because if, it's still going to be a seller's market, so there's still going to be a disparity between what buyers are willing to pay and what sellers are hoping to ask for. But if you are looking to upgrade, right, you should pay attention to the MOP ECs. I feel they represent good value for money, especially if you are looking for a good size. And if you've been listening and you've been joining us, right, try to go for the bigger units, because I foresee demand for those large units to continue to go and continue increasing at an exponential rate, not just next year, but as we move on and in the years to come, right? So if don't need to be too afraid with, right, paying the prices that these owners are asking for. And of course, at the end of the day, if you are staying in it, right, you got to pay for it anyway. So large units in ECs hitting its MOP, right, good opportunity, right? Even if you're an investor, is something that you can take a look at. HDB MOP Supply in 2022, right, very high number. You don't really need to go and look at it in very great detail. I just tallied all of them up. We expect 28,000 units hitting its MOP next year. So for those of you who are sitting on the fence, I think this whole cooling measure really gives you a opportunity to take action with all the uncertainty and all the fog of war in front of us, to take action, because you don't want to be competing with these guys coming into the market with, well, not much new choices for them to buy, because all of them are flocking into the MOP market, into the TOP market, into the resale market. Resale market already not a lot. The TOP market, yes, increased, but over in the OCR not a lot as well. Yeah. Projects predicted to be launched in 2022, right? Like I said earlier, if you look at the numbers, it may look like quite a lot, but if you really just tally out the number of units, it is not that many. Yeah, which is why I say the inventory and choices will remain low. But what would I be interested to look at really would be the site at Jalan Anak Bukit. Far East got themselves a pretty good deal because of the lack of number of bidders for that project. But if we all know, Far East, even though they buy the land cheap, they're not going to sell you for cheap. I would also like to pay attention to Belgravia Ace. I feel it's a landed cluster development. For those of you who are looking to buy a landed, but landed prices have just gone up so much, I think it's a pretty interesting alternative for you. Okay, but just pay attention, cluster developments, they may not be so easy to sell moving forward. So it's all about the price points. Yeah, it's all about the price point. Pay attention to the price points. Okay, Royal, pardon the misspelling, Royal Hallmark. This is at Hague Road, not a big project. I think 30 over units. But I've taken a look at that, and the kind of quantums that they are offering, the kind of product that they are offering fits in a really nice quantum for a lot of people. So that one is going to be launched soon as well. I will also pay quite a bit of attention to the Lentor and Ang Mo Kio launch. Like I said earlier, I would like to see what's the take-up rate like for OCR in excess of 2,000 PSF, because that's going to set the real benchmark. And if the take-up rate there is high, it will give all of us a lot of confidence in where the market will go in the future. But if I were to gather throw out a guess, I would expect the take-up rate to be pretty high because of the fact that there's just not that many options available in the market. For those of you waiting for those Lentor and Ang Mo Kio site, right, let us know what's the kind of prices you are willing to pay for. I'll be very happy to have a discussion really to understand the thought process behind that. Another one I would be very interested to take a look at would be Thiam Sui Avenue, the recent en bloc by Hoi Hub and Sunway. So they bought up a series of landed properties, and they're going to be building up freehold developments, luxury condominiums, right? About 800 units over in District 15, right? Why this one is very interesting? Because this price will match up. Let's see how the Dunman Road site match up. I would really want to see what's the price difference around there, because based on the transacted price Thiam Sui Avenue, right? They will likely launch at, you know, around the mid 2000s, 2005 to 2006 PSF. That's freehold. You know, judging by what the OCR prices are going to hit and the OCR land prices of the last Lentor land bid, right? I wouldn't be surprised if the Dunman Road site comes up to very close in terms of PSF with Thiam Sui Avenue, but that is 99 and Thiam Sui Avenue is freehold. So then, you know, up to you to decide which one offers better value for money. So that one will be pretty interesting to take a look at. Yeah. So commercial break. Yeah, let me take a sip of water. Well, this time around, I think we are still going to be pretty on time. So right, if you like what we shared, right, please do me a favor, click on the like and subscribe button and the bell notification icon to be reminded. This is for those of you that are on YouTube lah, but those of you who are on Facebook, right, help me like and share this, right, that will help in the Facebook algorithm. But for the YouTube algorithm, like, share, subscribe, hit the bell notification button. Okay, end of commercial break. Let's continue. So what are some of the key trends that's going to happen moving forward? Okay, like I mentioned in my cooling measures video, we're going to see people paying more attention to quantums as opposed to PSFs. What do I mean by that? We're going to hear people talk a lot more about, you know, I'm looking for a 3-bedder and maybe a 1.6 million price point, as opposed to last time, you know, a couple of years back, whereby people say, oh, I'm trying to find something that, you know, around the 1200 PSF, 1300 PSF. Because of the cooling measures and the adjustments in TDS that's going to put a cap on the kind of quantums, right? Basically the net price, right, that people can pay for a property. But what doesn't change is their requirements for number of bedrooms. Yeah, but you know, so if you need 3 bedrooms, you're going to need 3 bedrooms, right? But to keep quantums affordable, what developers will potentially do is start to build more 3 compact bedrooms, right, at the 900 square feet kind of points, because we've already seen PSFs shooting up because of land sale prices. How do then developers keep units affordable for the mass market? Is to shrink sizes within the minimum average unit size rules. So you wouldn't really will have much choice in terms of being picky with your PSF, right? The attention really more so in terms of quantums. And that brings me to my second point, right? What do I feel will be, you know, the units that will move in terms of prices higher, right? The lowest price in category units, right, will move quickly. For example, right, let me just open up this one. For example, right, if you have like 1 bidders at around the 600k price point, right, those units will move fast. 2 bidders at a 900k price point, 3 bidders at the 1.1 million price point, 4 bidders at the $1.5 million price point, right? Just throwing out some suggestions over there. So those are like the lowest entry price to get the kind of number of bedrooms, right? For the 1 and 2 bidders, because of the increase in ABSD, we're going to see attention being driven to those particular units. For the 1.1 to 1.5 million price points, for 3-4 bidders, I feel those are going to be very attractive, as the TDSI is going to start to weigh people down a little bit, or people will have to watch their budget a little bit more, because they plan to do method D moving forward. If they want to eventually have 2 properties, they're going to have to manage in terms of the budget for the property for own stay. All right. So then we're going to see a higher number of sub-sale units, right? Quite a fair bit of profit taking in the market next year with the units hitting their TOP, right? And so that's going to also push up benchmark prices, because those guys, they have bought in at, like, for example, Park Esta, right? Our good friend here in the chat, right? Kit, if you are still with us, yeah, Kit, right? Kit We bought our Park Esta, I think 1,700, 1,700 PSF. There's no way anyone in Park Esta is going to sell it. I believe lesser than 1,009 or 2,000 PSF. I think I'm going to get scolded by Kit if I say. Last year I remember we had that conversation wanting to hit 2,000 PSF, and I think there was some hesitation around there. But I think now I'm going to probably be condemned in the Park Esta chat if anyone were to throw expected selling prices lower than 2,500 PSF lah. So I mean, with this, people are still going to be buying up units. We have seen people actually buying up sub-sale units at record-setting prices. So all of that again, right, is going to then be trickled down into the resale market, because people are having to work within certain budgets. Those that the budget just cannot match up to the asking prices of these newer units will then trickle down and go and buy the more slightly older units lah. So all this will again, right, domino effect of new benchmark prices. So we're going to have new land sale prices, our Lentor Central, our Ang Mo Kio, right? Then we have our sub-sale prices of projects hitting their TOP. So these both will be the price setters and new benchmark price setters lah. Right, we're going to see sharp increments. So this one is point number 4, which is perhaps one of the more interesting trends, right? That I predict, right, what will happen with the sharp increase in OCR and RCR prices. It will drive local demand into the CCR. It's something that we are just starting to see, right? For those of you who follow us, right, again, if you read our infographic about our takeaway from the Canning Hill Piers launch, so 81% of Canning Hill Piers were bought up by locals. Okay, so I think locals, they also have a keen sense that with OCR prices, RCR, right, OCR prices being artificially pushed up because of the lack of supply in the market, right, maybe the better word to use is inevitably pushed up with the lack of supply in the market. Maybe now, because the CCR has underperformed the market in the last 5-6 years, maybe it's time for us to start to explore it, right? Because the OCR supply is high, the demand, right, if they don't manage to come in, right, if that 10% does well enough to halt the foreign buyers coming in, it's going to cause local buyers to start to explore the CCR, right? All this, right, with the multiple trends that I've been pointing out earlier, increased affluence, right, things like that. People are going to start considering the CCR, and that's going to change that whole game within the CCR already, right? Previously, we were a bit concerned with moving into the CCR because it was dominated by foreigners, dominated by investors, causing a lot of disparity in prices, But if local demand is moving into the CCR, then that's going to change the game in the CCR more. So the CCR market will be a pretty interesting market to watch in the next 2 to 3 years, and I would really want to be looking out for the take-up rate of locals in the CCR moving forward. And another thing that I'm starting to see is first-timers going for condos over HDBs, right? Because first thing is with HDB COVs coming up to record highs, right? Some of them just not even able to get a resale HDB. So resale HDB already is because they can't get BTO, they cannot get brand new EC, they already fall back to HDB, but constantly just cannot find even a resale HDB. A lot of them are they're moving their attention to condos, right, making do with the sizes coming down to the some of the 2-bedder condos. So these are some of the key trends that I see, and I expect them to continue into 2020. So how do we wrap up all of this observations, data, to put into some of the predictions? This year I'm a bit more garang. I will put out more predictions than last year. Last year only there to put out 2, but since we did well last year in the prediction, let's throw out a little bit more, and then we're going to come back at the end of 2022 and see how our predictions played out, right? So prediction number 1, I expect low impact of current round of cooling measures, the most recent round of cooling measures. If prices were to continue to go up, and I would see if the prices continue to go up like 6-7%, right, that another round of cooling measures may come around, right, in 2020. Not impossible, right, because again, if the interest rates were to continue being low, and if supply chain issues unresolved, right, that may cause prices to continue going up. Secondly, if another key thing, which is why I would really want to be looking at what are some of the transacted prices for the government land sales, how many developers are bidding for them. So that will tell me whether or not inventory is going to come up significantly, right? We want to be looking at en bloc figures. Will inventory numbers be shooting up significantly together with price? If that's going to happen, I'm pretty sure another round of cooling measures will come on. And you know, with adjustment of existing measures already done this time around, the next time around, it may be something totally new to us, and I hope, touch wood, I really hope it's not going to be capital gains tax, because that's gonna be a rude shock to the market, and that's gonna really suck away demand from the market. So, right, I would expect HDB price increments to slow down based on the observations, right? Increase supply in the market, increase HDB MOP, you know, and also key trends like people then just going, forget it, I'm paying so much for HDB, I might as well just buy a condo, right? Also, one of the cooling measures have affected HDB buyers as well, with the lowering of LTV for HDB loan, right? But very marginal impact on the market. But all in all, I feel HDB price increments will slow down. Again, which is why I'm suggesting HDB upgraders. Those of you have already hit your MOP, but you know, maybe sitting on the fence to take action, or at least to start planning things out, thinking about it seriously. Yeah, if you want to sell at a good price. Okay. Right, continued increase in rentals. I think we saw this in one of the newspaper articles. I think it was today or yesterday. So 3 bedrooms and above, especially in the OCR, I expect rentals to continue to increase. Okay, why? A lot of owners may be selling their units, trying to catch the high price, right, and maybe wait out to see what's available in the market. They more emotional than anything else, being you know, I want to sell and then monitor the market. So that's going to drive a lot demand into rentals in the OCR. Okay, so good news for landlords, right, of large units. Again, coming back to my suggestion and what I say being like some of the opportunities, right? Large units in the OCRs, like 3 bedrooms and above, will do well even as an investment rental, not just capital appreciation. Win-win on both sides. Private resale prices continue to increase, right? I would actually expect it to be, you know, maybe not so much same pace. I also don't want it to be same pace as last year, because as this year, right, if not another round of cooling measures were to come. But unfortunately, based on what I see, like based on the data, based on the figures, I don't see that really slowing down a lot, right? Because with the newly TOP units, sub-sales going to be pushing up prices, because with the new launch from the newly set benchmark prices of the government land sales, right, that 2 factors that I said earlier, those are going to push up property price index. Yeah, because I mean, in this kind of market, right, sellers market, sellers don't like to sell their properties cheaper. Right, they will more likely than not just take their units off the market. So, you know, you won't really, you know, if you understand how property price index work, they are driven by actual transactions in the market as opposed to sentiments. So if there's no transaction in the market and all the transactions are more expensive than the last, that pushes up the price index. Okay, so I'm going to expect to see more en bloc cases, maybe not so much in the core central region like the Shun Tak one, High Point, but the OCR ones, we're going to see more en blocs happening over there. Maybe not so much on the mega projects, right? But more so on the small little projects, maybe under 100 units or maybe under 500 units. Developer will still be willing to stomach it lah, and they will know that they can sell it easily because of the undersupply in the OCR market. Yeah, I also expect to see high take-up rate in launches, right? You know, we only need to take a look at the 81% take-up rate over at Canning Hill Piers at an average of 3,000 PSF. You know, I'm going to expect high take-up rate in launches, right? Basically a function of high demand and low supply. Okay. And some of the opportunities, right? Last but not least, some of the opportunities that it presents itself. Developer balance inventory, right? If you look hard enough, right, there are still developer balance inventory left based off past price points. Yeah, still available, right? Go and look out for them, right? Large OCR units, again, something that's carried on from my prediction last year. And like I said, I believe large units in the OCR will continue to outperform in the future, right? Low supply, high demand, okay? And also because being led by landed prices stretching out of the affordability range currently of the bulk of the market, right? Affordable quantum CCR units based on the earlier key trend that I mentioned. So again, right, let me just maybe quickly explain this last point to you. Previously, last time, a lot of the the CCR units, they are built very, very big, hence giving a very large quantum to be able to buy them, right? But in the last cycle, the 2017-2018 cycle, there were a lot of CCR units that came online that were built in the more affordable or, you know, slightly smaller sizes, right? And those sizes, right, because of their size, yeah, are at a more affordable quantum for, you know, entry level buyers into the CCR market, right? So we have like our 900 square feet 3 compact maybe, right, at the mid 2000 PSFs. So if you're gonna take a look at that, you know, maybe not so out of reach as we used to think, because last time it would be 2,500 square feet, right? Even though at 1,000 PSF is still going to be $2.5 million. So yeah, if you get where I'm coming from, right? Affordable quantum CCR units, I feel will do well moving forward. If you can get some compact 3-bedders, you know, 900 square feet, 1,000 square feet 3-bedders, I feel they will start to perform well moving forward. Really based on the fact that local demand will start to move into those areas and start to select those products. Okay. So I've moved up pretty quickly, covering, you know, recap quickly, like as I hope it was quick, 1.5 hours. But if you want to understand the market in greater detail, right, again, right, we are doing our fundamentals to real estate webinar, right? You can click on the link below. Andrew, are we going to be putting the link into the chat? Yes. Yep. Okay. So wait a minute, right? And we'll try to put that link into the chat. Else, yeah, we're going to be pinning it up onto our Facebook page, and you can go there and sign up for the webinar. You'll be on the 12th of Jan. So moving forward next year, every end of the month, yeah, we will have our Facebook Live, and every middle of the month, we'll be having our webinar. So in the webinar, it's a more closed session so that you will be not so shy to ask questions, and we are going to greater detail, because in the Facebook Live sessions is more touch and go as we cover different topics. But for the fundamentals of real estate, it's 90 minutes solid, really walk you through what are some of the important things that you need to know, both, you know, if you're upgrader, if you're investor, so on and so forth. Okay. Right, and again, we have our materials available. You know, drop me a text, drop us a PM, a DM if you want to have a look at some of these materials. More so, it's just to help you understand the market better, so that you don't sit on the fence and then just miss out on all the opportunities out there. How can we help? You know, we have services before, during, and after the purchase. We walk you through the entire purchase. Okay. And so, right, like I said, why we missed out on the November Facebook Live was because Elizabeth and I welcomed our first baby, and that's also one of the reasons, because a lot of people ask, hey, why this year never really see Elizabeth? So she's been resting, pregnant. She was been pregnant, so taking things a little bit slower, focus on looking after our son. Right, so just share a bit of good news with all our listeners. And also, baby Evan wishes everybody a very happy new year. Please stay safe. We look forward to continuously value add to all our listeners in the next year. So, right, we're going to end off with the Q&A as usual. So anyone has any questions, right? Most likely nobody will ask now. Every Facebook Live I end with this, and then nobody asks any questions. Let's see if this time around got people ask any question. Thank you, Gabriel. Thank you. I'm gonna stick around for another 30 seconds to 1 minute just to see if anybody have any questions, or if you'd like me to cycle back to any particular slide. Yeah? But if not, I really thank all of you for joining us. Most of you already holiday mood, but still willing to sit through 1.5 hours of me going on and on about property. So really thank you guys so much. Thank you, Eagle Eyes. Thank you. Thanks, Kid. Thank you so much. Yeah, Happy New Year to you as well. Okay, if we have no other questions, again, for those of you who want to join the webinar, right? Yes, finally it's there. Thank you, Andrew. You can click on the link to join. Okay, if not, it will be pinned up on our YouTube, our Facebook page. All right, so that's about it. Thank you guys all so much for the support this 1 year. And continue to support us next year. And at the end of next year, we're going to cycle back to see how accurate our predictions are this time around. So see you guys next month and next year. Bye bye.